Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It's October 7th. This will be our chart lesson for the day, and quite a few decent trades today. It's really it's really a range day. You can see we started out in this range here. Once we started bouncing and going higher, if we ever got through here, this would be my first target. And then, of course, if we went higher than that, I would measure this first range and look for a measured move. You can see we went a little bit higher. We got a little failed break higher, and then we traded back down, and we ended up testing these lows again right into the close. So it's a range day. It's a big enough range, though, that there's enough room to get trends within. This was a fairly nice move coming down. You had a couple opportunities to get in it. If you caught it up here, you can ride this really all the way down. Even if you got here, you could catch a good bit of this, the other half of it basically. So uh, some good trades if you could catch them here. Um, what started out to look like it was going to be a real slow day turned out there were some decent trades. So we had to be patient this morning. We didn't get a really good trade until almost 9 o'clock, about a quarter till. But let me back out. We'll go through the trades. There's not a lot of them today, so it won't take long. These are one of these days where you just got to sit and be patient, and you'll get I mean, the trades that were there were pretty good ones. So um, early on, they were all rather iffy, I guess is the way I would describe them. So 7 o'clock came right in here, and you got a failed second entry long here, and you're still a little ways away from the EMA. The problem is we're kind of up here in no man's land. We're outside of what looks like the tight range here, although you probably could look at this like a failed breakout, although it may bounce, double test there and go higher. It doesn't. So uh, my guess is our target was going to be up here, but when we started coming back down, then you're shooting for this for your target. That's the way range days work, and this definitely looks like a range so far. But notice that high. Generally, I don't have a line on here, but there's a line across there. You actually just would have had this down here to begin with. And you can see that, and I would have moved it up here afterwards to right here. But you treat this like a failed breakout, and notice we made that high. Tried to go higher once, tried to go higher twice, and it failed. Really, you got an inside bar here, so when it broke below there, this bar, one tick, that's your failure. So that's where you would enter one tick below this bar. But this is your swing high, so your stop still has to go above the green bar. And that would have been a relatively easy trade. And then we come back, and you actually get a little two-legged correction here. That bar, if that would have been a bearish bar, I'd have probably said take it. Because there is a hidden second entry there, but that bar is just almost bullish to very neutral. So you can't take that trade, unfortunately. And there is a lower high here. Notice we break higher and turn back down, but you're right back into the other side. And that's just too dangerous to be going short right into that. Looks like we end up getting an overshoot. It's possible there's two tiers. I didn't even look at it. It doesn't matter because when we bounce down here, you're treating this like a range. But it looks like it's probably a two-tiered channel. I treated it like an overshoot, but it didn't really matter again because we bounced down here and we've been bouncing down through there all morning. So all through the overnight basically. So being that far away from the EMA, this is one of those you may risk. This is where you catch. Somebody today asked me, where do I look for runners? I look for runners on trends, bigger trends, and I look for runners on failed breaks like this one when you get this, because usually if you get a failed break down here and this holds, this will be an important low. It may not be the important low for the day, but it's generally going to be an important low. And you can see that turns out to be the low of the day. So that's an important low. So if you can catch that, and you definitely could have caught a runner on this, your runner wouldn't have got stopped out. So that's what you like to see, and that's where I look for runners on these failed breaks or bounces off the very lows. Notice that we went lower, so you could treat that like a failed break, but it's still a bounce off the lows that we've been bouncing off. Again, you're better to wait on the reversal pattern or a higher low or something, but this is where a lot of times you'll catch your best move. So, and that's a fairly bullish bar. It's got a little red to it. Didn't close on its high, but it's still traded way down here and closed almost within 2 ticks of its high. And just being that far away from the EMA and this being solid support, you can almost count on that bouncing. And it does. And of course you run up here, and that's your first break of this one. This is a second entry short. You probably wouldn't have caught this trade because it does gap over there and continue lower. The way I usually handle this is if I want to enter this trade bad enough, I'd probably drop a limit order right there where I normally would have gotten short if this was already trading down here. I wouldn't let it go all the way down here and come back, but if it comes back in that original bar and fills it without being too far down, I'd probably drop a sell limit order in there and hope it comes back. In this case, it did come back here. It may not have filled you, and then it dropped on down, and you would have got your scalp anyway. But when that fails, that's a failed second entry short. Technically, it's not because it got enough, but we just came off the lows of a range day. So you may take this long here. The main reason I don't like it is because this inside matching high and low bar here. If it would have broke on above it right here, I'd say definitely go for it. But when you start getting this 2-bar matching high, you would have thought that would have already broke and gone higher. It does turn out to be a pretty nice move, and you'd at least look for a measured leg like so, and then you see it kind of corrects a little bit before it goes higher again. Then we run up, make a new high, pull back first entry, you pull back, and there's a second entry long here. And the way this triggered is it went lower first and then turned and went out this side. So technically your second entry triggered when it broke above here, so you could have had a buy stop right there. However, you could have waited on this bar and maybe even put a buy stop right there. But what I'd probably do is wait for prices to break above here and drop a limit order 1 tick back here if above that bar, and see if it'll break higher and come back, which it would have. And you would have got filled at the original price instead of getting filled way up here on your second entry. But as nice as that signal bar looks and it's still a second entry, I wouldn't have a problem probably putting the buy stop here. But you're starting to get a little more risk in it, because even though it's only 2 ticks, it doesn't take much. It could run up here and make 1 tick higher or make a triple top and turn down. So you got to be careful on those trades. So, but technically, again, to explain that one more time, the second entry triggered when it broke above this bar because it went lower first and then turned and went right up. So when it broke above that bar right there, that's when it became a second entry long. So that's where once I saw this trading down and then turning back up like it was going to trigger, I'd probably put my buy stop right there and go long right there. That's how you want to trade that. So don't wait for this to close. I'm going to buy right here, 1 tick above that bar. So, and of course it runs up and then it comes back again and gives you a double test. And technically that's 2 more legs back again. Even though it went 1 tick higher, that's still 2 swings back to test the lows again. And that's your first close outside the trend channel line. And notice that little overshoot right there. That's always a clue that you may get a break soon. Generally, when you get an overshoot, you're going to get a close outside the trend line on the other side relatively quickly. Not 100%, but usually that's what happens. And I like going long there just basically on the double test. You don't even need that second entry. Even if you count that as a first entry, I'd still like this because of the double test and a nice bullish bar. We run up, we come back, we make a higher low. This bar is probably bullish enough on that higher low, but it is right into some resistance. We do have enough room back up to here to get out. My problem with this one is you got this inside bar with matching highs. It didn't break higher. That concerns me. Sometimes that's not a good sign. So this one's a little more risky. So rather than make it blue, I made it green. And there is a true failed second entry short right here, but you're going long right into the highs of the day. I'm not crazy about that. You can see that. Technically, it's not counting the overnight highs because that was up here. But you had to assume that's where we're going. So for that reason, you may take that trade because it does pull back and test that. I didn't mark it, and there it does confirm this shorter term trend line right up through here, the brown one. So that's always a possibility. I just think it's a little risky being that far away from the EMA, being right into the highs. But it's a possibility. And you're better off to wait up here. Notice what happens. It pulls back. First entry, pulls back. And you get a perfect second entry right off the EMA. Nice bullish bar. That's the better trade. You get a higher low here too, but same thing is down here. You don't have a lot of room right back into these highs. But when it comes back and gives you a failed second entry short and bounces and gives you a double test of that EMA as well, now I like it. I wouldn't have a problem entering there. And that's a relatively bullish bar too. So, but of course on a failure it doesn't always matter. But in this case, if this wasn't a relatively bullish bar, even though there's a failed second entry short, I probably, if this was a real bearish bar, I'd probably say skip it. Of course, then we make a double top, try to go higher once, and then we get a second entry long right there. It turns up and fails and then turns down. Again, your entry is one tick below this bar right here. That's a trap right there. If you waited till this bar, it gaps over, and you may not have time. You probably can't get in that trade. You could have dropped a limit order and let it come back here and risked it, but we already had what looked like an overshoot, so I'm not crazy about letting this come back and fill me. If I didn't get in right here, I'd probably skip this trade. But it does come back and give you a failed second entry long, so you get another opportunity basically at the same place you originally had, maybe a little tick worse, but that's okay. Notice your new high, there's a double top, so first entry, second entry, and it fails. Boom. But that's a trap. That's a long trap right there. And you can see how quickly people had to exit. And that's why it drops so quickly. But then it comes back and gives you another chance. And I like entering there on the failed second entry long. Very small bar, bearish. It does come back again here. But this would be your second entry short, but it's too bullish, and over here you're too late. So even though it works, you can't enter on this one. This is your signal bar, and it'd be one tick below that would be your entry if you were entering. But here's the other thing, you got this trend line working up through there. If this wasn't a failed second entry long, there's no way I'd probably take that trade. I'd have waited on this break and then tried to get in, but then you don't get an entry either, so you probably would have missed that trade. So if your chart looked a little different, if you had a bearish bar here, that'd be okay to enter. Of course, we bounce, and again, you don't get a chance to enter here. You get a first entry, and then you get a second entry short, and now you got to go long right into the highs. Never a good thing. There is a lower high here, and there is a break and lower high, but we don't have a higher high yet. So you may get that second leg up, and guess what? If you went short right there, that's why you always want to wait on the second entry, because if you see that new low, that's just a first entry. It is a lower high off the highs, but it's the first break. This has been a pretty strong trend, and you might get that new high before you try to go lower. So you really got to wait and prove this move is over. And here's how you do that. You get a lower high, and then you get a little trap that looks similar to the other one. Looks similar to this one, really. So it's like a repeat pattern. And notice that low, first entry, second entry. So it's a second entry short, but it's also a failed second entry long. Big bearish bar. I like going short there. If you catch that one trade, that would be the only one you really need today. There's a lower high here, but we've moved down. Well, it's not much of a correction. Even though it works, most of the time it's probably going to get two legs back to the trend line or the EMA. And but notice what happens here. We come back, you get a failed second entry long, but again, we're not back to the trend line, but then it comes back again. That's really, you made that high, a little correction, you test it once, test it twice, and this actually went higher first and then turned and went out the other side. You could do that or wait on this one to close. Even then, you get a better entry here. That's probably where I would enter, one tick below this. I wouldn't wait on this to close. You could, but I wouldn't. So, and then off it goes again. And again, this is just a little double test. You made that high, you try to go higher once, twice. And the fact that it broke higher and then turns down, this is probably going to trap people, and you can see it. It pretty much moved on down pretty quickly. And it did come back here. You could have let it break below this bar and then drop a limit order back and let it come back and fill you, and you might have got filled that way on it. And then by the time you get down here, you're too far away from the EMA. And you see it does bounce pretty quickly. And that takes you into the 2 o'clock hour. I wouldn't be trading in here. There's a failed second entry short right there. It would have worked. But, I mean, you might take that one. I'll mark it green. It's just right into the 2 o'clock hour. So, generally, you want a failed second entry short reversal pattern to push on through the EMA and come back and test it from the upper side. So that's really risky going long there. I'd probably been more apt to try to go short there than I would have long, but you don't really have two complete legs. That even though there's a first entry and a second entry, that doesn't look like two legs back, which is the idea behind it. So I'm more apt to try to go long there than I would be to go short, especially on that failure. And of course, if you draw your trend line there too, you'll see that, well, you can't really go short there because you're going short right into a possible trend line, and it confirms it right there, and that's the other reason I like going long on that one. And finally, you get a close outside, moves to a new high, and you get a second leg up, and then it reverses, just like you would expect it to. So play those, always try to play your short-term trend lines, those micro trends, just like right here. Like these right here. Notice how you're coming down. You get the close outside, new low, and then it bounces. It's just the smart way to go. Here's one. Close outside, new high, then it turns down, running up. Close outside, tries to go higher and comes back. Of course, now you're working in the other direction, really. So you'd be wanting to look for corrections, these micro corrections. So keep that in mind. And but yeah, not a bad trading day. Most of the trades that were there were relatively easy to spot if you're just patient and look for second entries. And with trend, not a lot of trades, but there's more than enough here. And there's enough. I mean, there's 1, 2, 3, 4, 5, 6, 7, 8. Well, that's 8. That's pretty. On an average ES day, 8 to 10 trades. Blue or reds are generally what you're going to see. And we've gotten spoiled lately because we've had some really good days and a lot of volatility. But, I mean, this is kind of an average day, really, in the ES. So, anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.